Okay, hi everyone. My name is Reba. Thank you so much for joining our webinar. I'm sorry for being a couple minutes late, but we were just trying to make sure that we have everything finalized for you. Um, so I will, for the people who have just joined us for the first time, I'm just going to reintroduce ourselves, and then you'll see that we have a couple of new faces on here as well. So we're excited. Alrighty. So if you're not familiar with Good Agriculture, we are a small business that helps farmers with everything that goes along with running a farm. So we help farmers with marketing, finding grants, and of course, most importantly, bookkeeping and finances, which is what you're here for. This is the third webinar in our Winter Farm Financial Series. If you all were not familiar, the first one was our Farm Bookkeeping Basics webinar, and that spoke about the importance of cleaning up your books. We broke down establishing a chart of accounts, understanding financial statements, like your income, and briefly touched on cash flow statements. Oh, sorry. And of course, it was just really regarding your monthly bookkeeping process. And this last webinar that we just went through was our Advanced Farm Financial Management, which is a 2.0 version of that first webinar. So we built on those topics that I briefly mentioned, and then we spoke about analyzing profitability, cash flow management, budgeting, the balance sheet, the importance of cost allocation, and we really ran through some scenarios so that way you can see like how you can make good financial decision making by having that real world application to your farm. So I have included a link to our previous webinar. So if you want to check it out after the fact, but then I'm going to roll into introductions just to toss it over to Darrell, who we're
Okay.
excited to co-host with. And then he's going to toss it over to Allen, that I'm going to reintroduce myself and Good Agriculture.
All right. Okay. Well, I want to say good afternoon to everyone. It's my pleasure to be here. Again, my name is Darrell Tennie. We with the Tennie Group and the Tennie Agriculture Group. Okay. And we also have Agribusiness Crop Insurance Group. I am a crop insurance agent. We serve clients across in multiple states across the United States. But tonight, I want to say, first of all, I would like to thank Ms. Livia and Mr. Allen for giving us this great opportunity. And I'm looking for a long, continued working relationship with Good Agriculture. Okay. I think the work they have done and are doing is exceptional. And I want to thank them so much for this wonderful, wonderful opportunity first. Okay. But tonight, we're going to talk about this thing called the agribusiness way. Okay. What does that mean for agribusiness? As Ms. Livia and Mr. Allen talked earlier, as y'all went to a lot of the financials. Okay. And we're going to touch briefly on that tonight as well. But one of the things that we're going to talk to you about is when we say the agribusiness way, what does it mean to be an entity? What does that mean? What does that mean to operate? As I tell people, we have to redefine the word agriculture and define the word agribusiness, okay? As you see, a TM is on that side of that thing, call it trademark. This is our trademark. We have the USPTO trademark on the agribusiness way. Because our mission is to educate and empower everyone to understand accountability, assurance, sustainability with a solid foundation. And one of the things that I want people to understand, what does that mean to have a solid foundation? Okay. The reason I chose the agribusiness way, just real quickly, I'm undergrad South Carolina State, HBCU alum, and my undergrad was agribusiness. Okay. And, spent 20 plus years in corporate America and MBA. But the one thing that people ask me all the time is saying, what is the biggest thing you bought from corporate America? And I said, the biggest thing from corporate America is some have tellers, others have bankers. Okay. And I meant that, and I wanted to find the agribusiness way. I wanted to bring that corporate world to our businesses, but I want people to understand what does it mean to be agribusiness. Okay. So real quickly, the information we're here today regarding entities for taxpayers only as relations. We are not lawyers, but we can recommend you lawyers we work with that can provide you with legal advice and information. I am proud to say we do have a tax attorney that we work with within our firm. Okay. Now, this afternoon, we're going to talk about, consultancy training for financial planning of the agribusiness management and empower and educate the system and develop a solid foundation and the best business practice for structure of agribusiness entities, okay, and identify and develop solid financial management strategies through training and professional development. This is what we're going to be talking about, the agribusiness way, okay? Now, we're going to talk about entities. What does that mean to you to be an entity? And the one thing that we want to bring to our farmers as Ms. Libby and Ms. Allen are saying about your financials, about your understand what financials mean. But we want the entity to carry the responsibility, not the farmer. We want the entity to carry the liability, not the farmer. And so we're going to go through these entity structures and lead into what the biggest mistakes that people make throughout the agribusiness. We travel the country, all right, and we work with farmers across the United States and the territories. We have offices in North Carolina, South Carolina, Arkansas, Mississippi, and we're looking at expanding other areas, including in Puerto Rico, which we work with territories as well. Okay, now we're going to talk about tonight the sole proprietorship, partnership, S corporation, C corporation. We can touch briefly on this nonprofit, but one thing that we want to focus on with our farmers is understanding this thing called an LLC, the limited liability company. This is where people have the most problems with this thing called an LLC, not understanding what does it mean to have a limited liability company, okay? All right. And so we're going to encourage questions at certain points tonight. But tonight, we want to talk to you about this business entity. What does it mean? This is how we pass it down to the children. This is how we pass it down generationally. But we're going to start right from the beginning. Now, in person, we always ask people, how many people heard of SS4 form? Not too many people hold their hands up. But I say, how many people heard of EIN number? Few hold their hands up. This is called an SS4 form, and so commonly referred as an EIN number. This is the most important piece of paper you can have in your entities, the beginning or existing, is that EIN number. But this is where people mess up the most from the absolute beginning. Okay. Now, name, address is fine. But when you get down to section 698, it's going to ask you what type of entity are you. If you check the box and say sole proprietorship, you just told the IRS that I'm going to file a 1040 Schedule C. If you check the box partnership, you just told the IRS my filing requirements is a 1065 partner. If you check the box corporation, you just told the IRS that my filing requirements is 1120 R20S. If you check the box church, you just told the IRS that if I'm a recognized church, I don't have to file taxes. But you'd be surprised how many churches are trying to file taxes. But I want to reiterate this now. This piece of paper is where people mess up for the most, because when people fill out an EIN number, when they go down to the Secretary of State, and they fill out the organization or register their names, they think they're talking to the state and federal. No, you're not. When you register your entities at your local Secretary of State, you're only talking to the state, okay? But when you apply for your EIN number, you just told the IRS, this is how I want to be taxed and what my filing requirements would be for my EIN number. We'll explain it. Now, you're going to get this piece of paper, but you're only going to get it one time. And this is a piece of paper that nobody reads, okay? But we're going to come back to this to tell you why it's very important to keep this piece of paper and read it. And we're going to show you that as we come back to it, okay? Now, let's talk about a sole proprietorship. What does it mean? Also, an independent contractor, consultant, or freelancer. One-person operation. This business may have a number of employees or hired person, but the proprietor owns, runs, and manages business. No funds required for this type of business. Only report income and expenses on a 1040 Schedule C. Ladies and gentlemen, a lot of our farmers are sole proprietors. But the thing about a sole proprietorship, easy to organize, unlimited liability. Okay, I won't read everything on the slides, but ladies and gentlemen, this is where a lot of our farmers are falling at now. And this is a problem because we want the farmer to be independent of the business, because as a sole proprietorship, if ABC Farms made $100 a day, ABC Farms didn't make one dime. The individual made $100 a day, not the farm, because you are a sole proprietor. Owners receive all benefits, owner receives all profit. And the one thing about our farmers in our agribusiness communities, we don't keep good records. So if you, the individual, receive $100 a day and not ABC Farms, you are responsible for taxation and liability, as I said previously. But we want to show people how to legally reduce taxable income, okay? For example, if your farm received $100 a day, and you say, I came out of this conference and today I fill up on my farm and I put $50 in fuel. Next year this time, your taxable income will be $50, okay? But lo and behold, you said, before I came to this meeting tonight, I went by my local Walmart and I bought $20 in office supplies. Next year this time, my taxable income will be $30. I got at my farm today, and this afternoon tonight, my farm, I got a water leak and I had to spend $40 in repair and maintenance. Next year this time, what's your taxable income? Zero. Because if you made $100 a day and utilize legal tax deductions, okay? $50 in fuel, $20 in office supplies, and $40 in repair and maintenance on my farm, if my math is right, you made $100 a day, but you had legal tax deduction of $110 in legal tax deductions. Okay. You don't have to go nowhere to get hooked up. People come to us all the time and say, well, so-and-so said they hooked up, they're going to hook me up. And we tell people all the time, they come to the office sometimes so hooked up, we can't get them unhooked, okay? You don't need to do that. Utilize legal tax deduction. The next biggest mistake that a lot of our clients make across this country, they're coming to the office, and we ask a lot of questions in the office throughout. And the first thing we say, well, we see that you've been farming for last year. Can we see your last year return? The first thing they say, I didn't file it last year, my farm. And I didn't file my farm last year. Why? Because I didn't make no money. But like I told everybody, if you woke up this morning, you said, I want to grow everybody how to grow tomatoes, okay? And I went to my local Walmart, I bought a book on how to grow tomatoes. When I went to Walmart, the gas was tax deductible. When I bought the book, it was tax deductible. When I came back home and cut my computer on, possible tax deductions. And when I picked up the phone, 1-800 how to grow tomatoes, that cell phone had a possibility of tax deduction. Why? That's your startup costs. You got to spend money to make money. And a lot of our farmers think they have to make money before they start utilizing legal tax deduction. You have to keep up with what was my startup cost. Okay? And I'm going to jump a little ahead of myself, and people don't understand. When you put money into your startup or your business out of your pocket that you pay taxes on, that is now a loan to the business. So 3 years from now, 2 years from now, next year, you say, my business made $20,000. No, it didn't, because it owed me 10. Okay? So that's repayment of shareholders' equity. And that's going to go on your balance sheet, but we're going to talk about that as we get along. Okay? So these are things that as a sole proprietor. Now, as a sole proprietor, many of our farmers are filling out this form called Schedule C. Okay? But let me explain to you very quickly. If you are in any type of agribusiness operation, this is one form you do not use. You do not use a Schedule C. Okay? Now remember line 1. Okay? Just remember this, line 1. You do not use a Schedule C in any agribusiness operation. Okay? Remember line 1, gross receipts. Okay? Now we're going to go through quickly legal business expenses, the advertising, car and truck, commission and fees. Okay? Contract labor, depreciation. We're going to talk about that. Employee benefit program, insurance, interest, legal and professional fees, office expense, and pension and profit sharing. Okay. All legal ordinary business expenses, rent or lease, repair and maintenance, supplies, tax and license, travel, music, entertainment, utilities, and wages. We're going to get on. Now, this is what we call legal ordinary business, legal tax deduction, how to reduce your tax income. But now we're going to talk about farm income and expenses. What does it mean to be farm income and expenses? Okay. Now, in agriculture, you remember that thing called a line 1? You never put your income on one line in agriculture. You always got to identify where your income came from. Okay. Line 1, sales of livestock and other resale items. Okay. Line 2, costs and other basis of livestock or other items reported on line A. The reason you have a minus there, if you bought a bull for $2,000 and you sold it for $4,000, you might want to subtract the cost basis. Sales of livestock, produce and grains, and other products raised. Now, we always stop here real quickly because everyone says, my account says it doesn't matter. Yes, it does. Okay? Because if you said, I bought a box of tomatoes and I took them to the local farmer's market and I sold those tomatoes, you put that income on sales and livestock and other resale items. But if you raised those tomatoes and you took those tomatoes to the farmer's market and sold them, you put that under sales and livestock, produce and grains, and other products you raise. Okay? The purpose of that is because if you put it on line 1, you are not a farmer, you are a reseller. Now, if you put it on line 3, you are a production farmer. And so when you go and apply for your asset, apply for programs, FSA, NRCS, all these programs, guess what? They're going to base your opportunities on production income, not resale income. I'm a crop insurance agent. I operate in multiple states across the U.S., and we can't insure what you sold. We can only insure what you raised, okay? So that is very important to our farmers because many of our farmers are filling this thing out wrong, okay? corporate distribution program payments, agricultural program payments, commodity credit corporation, crop insurance proceeds. I'm a crop insurance agent. And a lot of farmers don't know if you receive crop insurance, if you qualify for 4 qualifying factors, you can defer that payment, okay? Custom high other income and gross income. Ladies and gentlemen, this is the only way you report agriculture income. Now we're going to get quickly into agriculture expenses, okay? Car and truck, chemicals, conservation expense. I always stop here. We get farmers all the time saying, well, if I got a conservation expense, am I going to get a 1099? Normally, the answer is yes. And the first thing they say, well, I don't want to report it because I don't want the IRS to know I got it. Guess what? If it's in your hand, the IRS already know you got it, okay? We just want to show you how to legally reduce those taxable income. If you receive $50,000 for fencing and it costs you $49,000 to put the fence up, what's your taxable income? $1,000. If you receive $50,000 in fencing and it costs you $52,000 to put the income up, put the fence up, what is your taxable income? Zero. Now, you went back down to your local NRCS office, FHA office, and they gave you another $1,500. What is your taxable income? Zero. Now, if you went back and down there and they gave you another $450, what is your taxable income? Zero. Because what happens here, remember now, if they give you, my math's right, they gave you another $51, what's your tax income? Only $1. The reason we have that is because if you put up you spent $52,000 and you was $2,000 in negative, any other income you receive under $2,000 is non-taxable because you already got a $2,000 deficit. Okay? A lot of farmers don't know that. Okay? You got a deficit already. Okay? I won't stay on it too long. We'll come back to that. Custom hire, depreciation. Please take depreciation because depreciation will reduce taxable income, but you add depreciation interest back in. If your farm made $10,000, you had $20,000 depreciation, your farm made $30,000. If your farm lost $10,000 and you had $20,000 depreciation, your farm made $10,000 because you add depreciation back in. This is one expense that our farmers don't keep up with because many of our farmers have depreciable assets. Anything over $10,000, they want you to capture it through depreciation. You want to keep depreciation because it gives you good inventory record. And many of our farmers, we're going to get in real quickly, are undervalued because they're not recording their assets, okay? Employee benefit fee, fertilizer, freight and trucking, gasoline, insurance, mortgage interest, other interest, labor hire, pension and profit sharing, rent and lease, vehicle and machinery equipment, land animals, repair and maintenance, season plants, storage and warehouse and supplies. Real quickly, everything is not under supply. You need to itemize your expenses because if you say I grew tomatoes and I made $100,000, but I put $90,000 in supplies, all this is done randomly, but you can spark one because where's the seeds? Where's the fertilizer? Where's all the other expenses associated with that income? Everything is not a supply, and that's a catch-all line. They don't like to see catch-all lines because they say, if you got everything in one line, let me see what else you got, okay? Taxes, utilities, veterinary breeding. We get this all the time. Can I write my dog off? No, you can't write your dog off, but if that is a service animal, we work with a lot of farmers in Texas who use herd dogs, okay? Certain breeds, certain purposes, yes, you can carry veterinary breeding and medicine and medicine for these animals, okay? Wages. Please, everyone understand. Please pay your wages. If you can afford to give yourself a wage-free farm, you're paying in Social Security, you're paying in Medicare, and you're also paying in your unemployment, okay? Also paying your unemployment. And one thing about wages, okay? If you receive wages, that if you made $100,000 on your farm and you spent $50,000 in wages, you only have to spend out $50,000 because the $50,000 you paid yourself is a tax deduction. Now, you've already paid tax on $50,000. Once you go file your taxes, your adjusted gross income comes to $25,000. Guess what? Possibility, here's your tax refund, okay? So this is how people don't understand why you want to pay yourself from your farm. It is a tax deductible expense, and you're paying your Social Security, Medicare, and unemployment, okay? And unemployment, okay? Now, this is the only form you fill out is a Schedule F. In any agriculture operation, you only fill out the Schedule F. And if you're 1120 or 1065, this is the only form you attach to the corporate return. You do not fill out 1120. You do not fill out 1065. You fill out a Schedule F and attach it to your corporate return. We'll get into that very quickly. One mistake a lot of people make on, you see line 3A and 4A. Okay, they always say, I'm gonna put $100,000 there, but a lot of people go on the right side and put everything down. But first of all, the biggest mistake that people make, my accountant say, it doesn't matter where I put the money. Yes, it does, because you put $100,000 on line 1C, that's the difference of 1A and 1B. That's not production income. You got to put it on line 2. But a lot of people go down and put everything on the right side. Not necessarily, because you receive a program payment of $100,000 and it's not taxable. You put $100,000 in 4A, but you put 0 in 4B. Okay? If you receive $100,000 in CC loan, using an example, but only $20,000 is taxable, you put $100,000 in line B, but in C, you only put $20,000. What is taxable? Okay, so these are things we want to express out to our farmers and stuff, and we want to encourage you, please don't use Social Security. We're going to talk about that. So again, this is the only form you use is a Schedule F in agriculture. You do not use no other form but a Schedule F, even on your corporate side, and attach it to your return. Okay, now a W-9 form, we tell all of our farmers, all our agribusiness men and women, as we like to say, do not put your name and Social Security number on this form. This form says Social Security number or EIN number. Okay? The reason we say don't put your name, because whatever your name is under your EIN number, that's the name you use on line 1, name of entity. If you say, well, I don't have a Social Security number, well, you can get a Social Security number, EIN number. You can get that free online or call our office. That's what we do. We build companies as well. Now, one thing I would say to you very clearly, if you put your name and your Social Security number, you are going to get a 1099. But the biggest thing, we don't want you to receive the 1099. We want your entity to receive the 1099. That's why we say put your name and your EIN number, not your business name and your EIN number. The reason line 3A is so important, because it's asking you individual, C corporation, S corporation, partnership, or tax or trust. The reason being because if you check individual, anything over $600, you're going to get a 1099. But if you check any other status, a corporation is not required to give another corporation a 1099. That's one of the reasons we tell people to fill out correctly and apply for under your EIN number, because a corporate owner, individual, only people required to get a 1099 is sole proprietorships or anybody over $600, individual over $600. Okay, that's why it's very important to look at corporate structures. Okay, all right. Again, now do not put your name and Social Security on this form. Okay, now 4835, if you farm rental, farm income, you can use a 4835 for land rental, but most people use a Schedule F. Okay. Before we get into it real quickly, we're going to touch this briefly. I know this already talked. Are there any questions?
So no questions in the chat so far, but yeah, everyone feel free to kind of take a second based off of what Darrell has said, maybe drop some questions in the chat. I definitely, had some questions that maybe would be good to elaborate on. So, we encounter a lot of farmers who they want to get into value added production. What, if you could elaborate on that and how that relates to, should I stay within the same entity or should I create a new one in order to have, a different operation that potentially buys from the farm? Do you have any kind of recommendations or based off your experience for someone interested in that?
Absolutely, because we're going to be coming into that to entity structure next, okay? But what I would tell everybody clearly, if you're saying I am growing tomatoes and I want to start selling tomato juice, create 2 separate entities, okay? Because one thing, you don't want to put all your eggs in one basket. Now, if you're growing tomatoes and you create the entity you're going to have a manufacturing entity, a production entity, and you're going to have a farm. Because if you sell the tomatoes off your farm, you could be sued for the assets of that farm. But if you create another entity, the entity is buying the tomatoes from the farm. The farm is not producing the tomato juice, the entity is. So you want to create 2 separate entities, not only for taxation, but for protection. And like you said, you're adding value. Okay. So you want to create 2 separate entities.
So at that point, that second operation, because it's no longer a farm operation, they would be filing a Schedule C, right?
Not necessarily now, because remember now, you both entities are in the agricultural space. because the entity, now, when you get down to your retail side, now, because you could get in debt with this, you can say, I got my production entity, I got my farm, but I also got my retail side. Now, if you start blowing up and selling tomatoes all over the country, I would create my retail side. Now, again, because you're still in the agricultural space, you still can file that Schedule F because you're selling agricultural products now. Okay? All right?
Got it.
Because
And there
you're
is
selling agricultural products.
yeah, that's great. Thank you. There is a question here. Let's see. The name, it says Fresh. So I don't know if that's their real name or not. So it says, but if you're structured as a single member LLC, besides the liability being better, wouldn't that just treat you like a sole proprietor anyway for some of these tax purposes? Oh, it is. It is a
Absolutely.
real name.
Absolutely, because we're going to get into that right now. What does it mean to be an LLC in a different types of structures? So a single member LLC, absolutely, okay? But we're going to get into that right now, okay? All right, I'm going to explain the difference in those, okay? All right?
Oh, yeah, let's get
Now,
into that.
okay, real quickly, profit and loss statement, balance sheet, cash flow, tribal journal ledger, okay? One thing we tell people all the time, and I'm not going to get this because y'all already went over this. This is your P&L, this is your tax return, okay? Here, again, only income that you pay tax on is earned income. If you loaning money, borrowing money, that's not taxable. If mama gave me money, my daddy gave me money, my brother loaned me money, I went out and got an equity line of credit, that's not taxable. A lot of our farmers come in, deposit money, guess what? The first thing they say, I'm on parent. No, you don't. You only pay tax on earned income, okay? Income and expenses, y'all already went through this, okay? The only thing I want to address on the second one, the balance sheet. This line right here, it says what you come to owns or owes, which everyone knows, but as well, what amount was invested by the shareholder. Because that means if you're putting money into that entity, that is a loan to the entity. That goes to shareholder equity. That is to be paid back to you. Many of our farmers are undervalued because they'll go ahead and buy a tractor for $300,000 on their balance sheet and they put $300,000 income, $300,000 liability. Absolutely not. Because what about the land? What about the building? What about all the other equipment? So guess what? You may have $1 million worth of equipment sitting in your land. You indebted $300,000, but if you put it on your balance sheet, you are $700,000 into the good. We undervalue ourselves all the time. Because when you think you buy a truck or tractor that you put the payment in your P&L, absolutely not. The payment goes on the balance sheet because when you make a payment, it reduces your liability and increases your asset. You do not put a monthly payment on the balance sheet. I mean, on the P&L, it goes on the balance sheet. Okay. Now we're gonna move real quickly. This is what a balance sheet looks like. What you own, y'all already been through that. Trial balances, cash flow statement. This is what it looks like. Trial balance and the general ledger. Everybody knows it's very, very important to the general ledger, but you've already been through that. Now we're going to get into what I'm talking about, disregarded entities, okay? Now, a lot of people come in, they say, me and my partners want to have a business together, and guess what? We ate together, we slept together, we said, guess what? The one thing you never did, we made money together, okay? So all the years of friendship, now let's get it right, okay? Now, one, sole proprietorship and entity, we won't read everything for the sake of time. Partnerships, that's an aggregate of two or more owners. But a partnership is just like a sole proprietorship, two or more people. You can drill down responsibility to each of the partners. We want to close that gap because we want you to be protected under the veil of that corporation. As a partnership, you still got to file 1065. If you are a general partnership, you still got to file a Schedule F attached to the general partnership. Okay? K1 form, you're going to get from a partnership. You can't file your personal taxes without a K1 form. But here's what we want to get into. We want to get into what it means to form an entity, okay? Personal group established legal entity in your state. If you go down to your prospective state and file articles of incorporation, you'll file a corporate articles in the state you're in. If you file articles of organization, that is filing a limited liability company. LLCs are not a corporation. It's an organization of a group of people. Let me repeat. An LLC is not a corporation. It's an organization of a group of people. Now, here's the thing about what people get in trouble with LLCs. They have some characteristics of a corporation and some part as a corporation. I mean, some characteristics of a partnership. It can be organized to avoid double taxation. Owners are called members of management. Okay? If me and Miss Libby formed this and we said, Miss Libby is the smartest one of all, and we are now a managed manager LLC. But if I say, wait a minute, we're all going to make the decision. Guess what? Now we are a member managed LLC. That is distinction. But the problem that people have with LLCs and these entities is people do not understand a limited liability company can choose to file as a sole proprietorship, partnership, or elect to be taxed as a corporation. Strictly owned by owner 100, can be owned by a corporation, can be treated as a partnership, earnings or self-employment tax. But when people say all the time, how do I get to my classification? You remember that thing called an EIN number? Okay. If you are a single member LLC and they ask you, are you a single member and a multi-member, you check the box that I am a single member, you just told the IRS that I want to be taxed as a sole proprietorship. When it asks you, are you a single member, multi-member, you check multi-member, you just told the IRS I want to be taxed as a 1065 partnership. You should have checked the box corporation. Because when you check the box corporation, it will clearly tell you in that letter no one reads, you got 75 days to fill out the 2553. With the 2553, that is your S corporation election. Now you're taxed as an S corporation. Now you close that veil up and it can't penetrate that LLC. Now you are a corporation taxed as a corporation. If you don't fill this out within 75 days, you're going to be denied. Unless you right across the top, file and pursue with Revenue Procedure Rare Proc 2013-30. That's your late filing revenue procedure. Now I'm going to jump ahead and come back a little bit. You remember this letter here? No one reads. It clearly says right in here, it will be elected to file as an S corporation. You file in time to form 2553. No one reads this letter. If you have an EIN number, go back and get your letter. What is your filing requirements? And if you didn't check this box, you're going to be two things, a sole proprietorship or you're going to see Form 1065 in the middle. I know exactly what you are. When you come out from, we ask you for the EIN letter. But now, can you change your filing requirements? The answer is yes. I can go back and we can change your filing requirements. Second page is crucial. Who owns this entity? Okay, here we go. If you want someone to own 51%, someone to own 49%, the person who has the controlling interest owns the entity. Okay, we tell parents every day, Mama said, I talk to my babies, they're going to share equally. No, they're not. We want you to make sure you want to know who owns what, but a person with controlling interest is a person that has control. Okay, now, one thing about LLCs, here we go, as you asked that question, Mr. Allen. Yes, you can have multiple entities, but you can only have one social security number. Okay? Yes, I can reset an entity. I can't reset your social security number. If one entity made $10,000 in value added, the other entity lost $10,000, there's no tax to pay, offset. But one thing about this is how you protect it. Because if you say I can only make XYZ, I can only make $1,000, this can make $1 million because guess what? It received income, not you. It carried liability, not you. It's protecting, not you. So that's why we say, if you got a value added, create a separate entity because you can only be sued for the assets of the entity. If you got a problem and you know the train is coming down the road, you can always close this entity and start another one. You cannot start a new EIN number. Okay? People say all the time, how did you, I see a person went broke yesterday, but they're driving a brand new truck tomorrow. Because they didn't go broke. The entity went broke. How can you make all this money, but you have limited assets? Guess what? Because you didn't receive a dime. The entity received a dime. Always remember that, okay? And a lot of people say, if I'm husband and wife, should I do 50-50? I say, if you love each other, you know you ain't going nowhere, do it in one person's name. But if you have doubts, you put it in two people's names, okay? I would tell people, always don't, because you're gonna protect the exposure of the spouse. Okay, the entity is his own self now. It received the money, not you. It is responsible for liability, not you. And it can be started over, not you. Okay, so that's why you want to have multiple entities because we get a lot of people, veterans, professionals coming back in agriculture. Well, we want to bring you back correctly. Thank you for your service to my veterans. But we don't want our veterans to come back and spend all their retirements or what they did, disability, whatever, have any liability. We don't want our professionals to come out of agriculture with liability. Your entity is what you're loaning the money to. It's going to carry the liability. It's going to receive the income, not you, the veteran or professional or anyone coming back. So I got a child living in New York. So you mean to tell me I can make $100,000 in New York and my farm lost $10,000 back home? Now my taxable income is only Only $90,000? Yes, because your LLC, when you get your K-1 form, it offsets your personal income. Okay? It
Hey,
offsets your
Darrell,
personal income. Yes, ma'am. Yes, sir.
I have one question in the chat that I wanted to interrupt you real quick. So
Mhm.
it's actually a two-part question. It's from Andy. They said, does the LLC protect our personal assets? That's question number one. And then, can we get sued personally and have our farm business assets taken?
That's why you want the LLC, because it carries the loss of. That's why you want to tax as an S corporation, because as an S corporation, it's carrying liability, not you. It has responsibility, not you. Like I said, you see the train coming down the road, correct? Guess what? If you see that train coming down the road, you can always start a new EIN number. Start a new EIN, start a new LLC, and you can transfer asset to a new LLC. A lot of people, when we have problems coming down the road, what's the first thing they do? Liquidate assets. You got a truck for $10,000. Guess what? You're gonna sell it for $5,000 to yourself because you are liquidating, raising money. The next thing about the LLC as an entity, remember now, it's carrying all the liability, not you. So when you bought that truck, you bought that car, it's not in your name, it's in the entity's name. And when you go down and apply for a commercial application, you are now the guarantor and not the co-signer. It won't be on your credit report. You never owned it. The only thing you're saying is I'm guaranteed that I'm signing on behalf of my corporation, my company, that I would be responsible for. But guess what? If you see a problem coming, you can always liquidate your assets, okay? Or you can always sell it to yourself. You never owned it, the entity owned it. So you can only be sued for assets of entity,
Let us know if
okay?
that was a helpful answer, Andy.
Was that helpful?
They haven't responded yet, but yeah, no, that totally makes sense. Yeah, that's the whole point of this. They said yes.
Yes, and this is why you want to create entity, but you got to make sure now, go back and pull your EIN letter. I can always change the following requirements of EIN letter, okay? But again, now, we're going to move forward. Here's where we're at with the 2553. Read that letter, go back and pull your EIN letter and tell me what your following requirements are. I can always change that following requirements. But again, that LLC, tax as a corporation, it carries a liability, not you. And this is how we pass it generationally. We're passing the entity to our children, not debt. Okay, real quick, I'm trying to stay ahead of time. Double taxation avoided. S corporation does not pay any taxes. It's paid through the shareholders. Okay. Now, 1120S is where you're going to file. But remember, if you are a corporation, you do not fill this form here out. You fill the Schedule F out and attach it. Attach it to the 1120S. But I want to point out one thing real quickly. Remember that question was, can I be sued if anything happened? But guess what? If things started happening, you see a train coming down the road, you got some issues and you got to start over again. When you file this return, check that box and say final return. When you do a final return, you're shutting that entity down and you're shutting down the EIN number. Okay? So again, if you got ABC Farms, you can start ABCD, go back and close ABC, transfer assets to ABCD, and keep it moving. Because ABCD don't have no liabilities, only ABC has a liability. That's why you never operate under your social security number. You always operate under your EI number, taxed as a corporation. Okay? Check that box and say, and call it a day. Okay? Now, you cannot file your personal tax return without the K-1 form. And everything's line one is it's a pass-through. Okay? It's due March 15th, person due April 15th, and nonprofits due May 15th. Okay? You got to fill your personal tax return out. And I tell my clients, all of our clients, always file them together, because when you file your personal and your corporate, you can that corporation can help offset your personal. Okay. All right. Again, if this lose $10,000, you made 100. Guess what? Your tax income is only 90. Okay. If you made it 10,000, you made 100. Your net worth is 110,000. But remember, you guys, please fill that balance sheet out correct and list all your inventory. Real quickly, see corporation, double taxation, payroll, and financials. This is 1120S. See, we don't recommend 1120s. Okay. Now, here's a form a couple of people miss, okay? Farmers miss. The 982 is a very, very important form, okay? 982 is called cancellation of debt. A lot of our farmers receive 1099-Cs. That means it's going to be taxed to the individual to pay taxes, but not necessarily. Because if you're a farmer and you get a 1099-C, put it on the form 982, checkbox C, discharge due to qualified farming indebtedness. It's excluded from your taxable income. People say, well, you hooked me up. No, we didn't. We don't hook nobody up. We show you how to legally file an exclusion of your taxable income because it's qualified farm indebtedness. So you can use this for personal reason too. In Solvency, I'm broke, chapter 11, business property. A lot of people are in real estate, but we missed this as a form of 1092, cancellation of debt. Okay, real quick, wrapping up, 843. This is where you can ask for an abatement of penalties and interest. If you file a tax form late, they fine you. Guess what? You can ask for abatement. You can go back 2 years, get what's owed to you. If you pay an arrangement, 3 years was owed to you. I'm sorry, 3 years was owed to you. 2 if you make an arrangement, and we fix it. Please call the IRS back, please, when they call you, because the only reason the IRS garnish you to get you to call. People come all the time and say, well, this is the first one I got with a big green sticker on. No, you didn't. You got 15 more. You decided to open that because it got it certified. Then I took your money out, but guess what? Call the IRS. They can stop garnishment immediately. Okay? If you call them and make a payment arrangement, you are in compliance. If you can't pay, you go to uncollectible. And so that means it will give you a chance to get yourself together. You can stop putting everything in your mama name. You can put in your name because they're not going to bother you. That's what we have to understand why you need to call and make a payment arrangement. If you can't afford it, they'll make you uncollectible. Okay? Right quickly, we draw lien 12277, form 141. A lot of our farmers have equipment and stuff in liens. You can ask for to remove a lien. If you're in any type of agricultural operation and your payroll, you only pay using a 943, not a 941. You do not have to pay yourself once a week, once a month, every 2 weeks, because in agriculture, any income, any business, you can pay yourself once a year. A lot of our farmers pay themselves at harvest time or once a year. You only file a 943 because you only file this form once a year. A 941, you file 4 times a year. Agricultural income payroll is only filed once a year annually, okay? That's your 943. Always know what type of business you are. Foundation of the business will return your taxable income. Always have accurate accountability of your daily operation. People say, what's the best thing I can use? I tell people all the time, don't go out here and get the latest version of the PM chip, QuickBooks, or whatever. If you don't understand, all you need is something to tell you 2 plus 2 equals 4, okay? And remember, all daily expenditures may have tax implication. The jeans you wear, the cup you buy, the hat you have, the iPad you bought, the cell phone cover, everything you do, ladies and gentlemen, is not taxation for agribusiness men and women. It's not January 1st to April 15th. It's January 1st to December 31st, every day of the year. Any vacation that you take, that you conduct business on, go to Florida, visit the farms, guess what? Those days are tax deductible because any vacation you take, you conduct business on is tax deductible. So we want people to understand now. I want our farmers, our agribusiness men and women, to understand agribusiness, okay? We want you to understand agribusiness, okay? Any questions?
Thank you, Darrell. That was awesome. Yeah, please drop any questions. There's definitely a lot of information in there, a lot of forms.
I'm trying to make my time.
No,
Did a great job.
It's great. Yeah, but we'd love to open up for questions. And I guess in the meantime, I would like to also, maybe this is something on people's mind, so, it's a cliche almost to say that, tax season is this kind of stressful thing. And you kind of alluded to it in those points to remember of just, what would you suggest for these folks who kind of get overwhelmed at the thought of having to file taxes or, going through this whole process, and in relation to, good record keeping, and like, what are just some like good, tips that you've seen, or even among your own clients? What are the clients that you work with that it's a breeze because, it's not this major kind of thing where you have to go through and look, kind of investigate?
Clients that keep good records and good receipts, okay? One thing about our clients that make this thing, if you're in agriculture, do never commingle funds, okay? You always create a separate bank account, okay? It's not how much money you make in agriculture or business, it's how you receive the money. And you don't want no business income going into your personal account. Put it into a business account, because a lot of people say, well, I don't have records. Your bank transaction is your record. Well, my receipts faded. Your bank statement is your receipt, okay? And you want to make sure you use your bank correctly. If you put money into that bank and you didn't earn it, that's not taxable. If you put money in that bank and you didn't earn it, that's a loan to that business and it's repayable to you repayment share of equity. So what I tell people, the best thing to do is create separate bank accounts. Many people don't keep receipts. They can't find the receipts, okay? But if you create a separate bank account, the bank statements is your receipt, okay? That makes it complicated. It's easy. Stop worrying about, I made $100,000. Put it on your return. But where are your expenses? Because you made 100 and you spent $101, there's no taxes to pay. Okay? But I tell people to make it much easier. And another thing, if you use your credit card, you can always go and say, highlight what you use as a businessman on a personal credit card, or go home and reimburse yourself. Just give yourself a reimbursement from the business bank account for what you used. Okay? So that's one of the things I would say. Okay?
Yeah, I love that. That's something that we highly recommend too. You know, when we're doing some bookkeeping work, if we notice that someone is mingling funds, that's like the first thing that we want to make them aware of is, hey, let's open up a new bank account. Let's get things straight in order so that you actually have financial clarity and know what's going on in your farm business. So,
and if your bank account was opened up with a social security number, don't. You open up with an EIN number. But if your EIN number was structured as a sole proprietor, go back and change the filing requirements. Fill out the 2553. It would change the filing requirements of EIN number. Sometimes they will issue a new one, but it always attached to the old one. Please go back and change the filing requirements of EIN number. So now the company is receiving the money, not you.
Yeah. And I guess on that note too, I guess another question that I'm sure a lot of farmers are thinking is, and of course, with the caveat, this is not legal advice or tax advice or anything like that, but just generally speaking, when it comes to all those different entities, would you say it's fair that the LLC is probably the best fit for most people?
Absolutely, because the LLC is a limited liability company. A LLC don't have president, secretary, treasurer, vice president. It has members and managers. And the reason we want to do an LLC, like we said, the caveat, not a business, we're not lawyers, we recommend lawyers. The caveat is, as an LLC, if you form a corporation in a state, you got to operate as a state corporate bylaws of that state. A LLC, you avoid that because you're a limited liability company and you can choose which way to file. A LLC is not a corporation. It's an organization of a group of people. So you avoid the state corporate laws.
And when it comes to choosing how you want to elect to file, any tips on someone who's like really struggling with, I don't really know what benefits me the most? What would you say to that?
LLC tax as an S corporation, because when you get that EIN number, if you check that box single member, guess what? You are a sole proprietor. You're receiving the money, not the LLC. You have the structure of a limited liability company, but you're taxed as a sole proprietor. You're filling out a Schedule F or a Schedule C. We don't want you to fill out a Schedule C in agriculture. We don't want you to fill out a Schedule C in business, because a Schedule C or F is an individual form. But agriculture, a Schedule F is the only form that you can attach to a corporate return. Ladies and gentlemen, file a LLC taxed as a corporation. Check that box corporation and fill that 2553 out in 75 days. If you do not fill that in 75 days, you're late. You're going to get denied. But right across the top, filing revenue procedure 2013-30 in pencil, crayon, blood, and ink. Filing revenue procedure 2013-30. That's your late filing revenue procedure.
Yeah, that's awesome. I have another question here. So, do you have any thoughts, generally speaking, on how to, or something that I like to say is, you kind of have your business books, but then you have like your tax books. And, one of them is kind of more just about the actual business insights, but one of them is about really maximizing, the lowering of your tax liability. Does that question make sense? And like, can you help these farmers kind of distinguish those two things?
Well, as we all talk about working together, we have an department that handles all of your finance. Now, a lot of people say my business books are, what we want people to understand, you need to get it. One, you need to bring together, because profit and loss, balance sheet, cash flow, trial balance, general ledger. You need to put everything. If you're going to have one bank account, if you're going to have two bank accounts, you need a chart of accounts or enterprise budget or enterprises, okay? But I would say, to me personally, I would say a business book and a tax book, because the business book is your tax book. What you need to keep up with is what incomes am I receiving and where is my profit at. Now, you see yourself made $100,000, but you say I only got $30,000 in legal tax deductions. So I got an expenditure of excess of $70,000. Guess what? Pay yourself. Put yourself on a payroll. Pay Social Security, Medicare. Because if you got $30,000 left and you pay yourself 50 of that, you only got $20 more thousand to expense out. Because if you see the excess, increase your payroll. Because when you file your taxes and now you claim the children, the house, the $2 and the cats, whatever, as earned income credit, your adjusted gross income went down. You paid yourself 50, my just gross income went down to 25. In most situations, here's your tax refund. If you got to keep up with that profit and loss statement, but remember now, that balance sheet is absolutely crucial too as well. Because again now, when you pay yourself, that's an add back. Depreciation is an add back. So pay yourself. Pay yourself from that entity, okay? Don't pay the government the money. If you can, give it to yourself, okay? And now you can claim possible refund, all right?
We do have a few more questions here.
Please, actually, I'm on your time.
Let's see. Oh, well, actually, Kelly says, do you take clients anywhere in the U.S.?
Absolutely. We work around the country and the territories. We would love to have the opportunity to work with you. We work around the country and territories. We'll put back up Rosalind and information as well.
Cool. And of course, Good Ag, we also work nationwide as well.
Absolutely.
Another question here, can you retroactively fill out an LLC if you've been operating as a sole proprietor in 2024 but want to switch to an LLC?
Absolutely. That form called a 2553, you change that form right across the top, file revenue procedure 2013-30. And on that 2553, it's going to ask you on the right-hand corner, what is your election date? Now, if you fill that LLC out, and that's for a C corporate as well. Let me make that clear. If you fill out February 12th of 2024, you can only go back to February 12th of 2024 because that was a form when the state received. You can't go to January 1st now because you wasn't in existence. Okay, so you can go back into the time you formed that LLC. So yes, you can fill out 2553 right across the top, following revenue procedure 2013-30, and ask for a procedure. But now I would say this very clearly. In most situations, if you're not breaking the banks and stuff, we would tell you to start from 1/1/2025 moving forward. Okay, but you can go back to the date of inception only 1 year previously, one prior year. Okay.
Nice, thank you. I had also a question too about the balance sheet real quick, kind of relating to that whole kind of the tension between how to think about, you know, the net worth of the business. You know, I think what I see sometimes with farmers struggle with is like, well, you know, the IRS forces me to depreciate these things on a certain schedule, which is fine for tax purposes. But then also they're trying to kind of understand, how does that relate to the actual fair market value? And, you know, in that sense, how does, you know, so how do I think about my balance sheet when I think about, you know, the assets that I have? And, you know, if something is fully depreciated, you know, maybe on my balance sheet, it's looking like my assets are very low, but maybe in reality, if I went out to the market, I want to sell something, it would still have value. How would you help someone like confused about that?
Depreciation doesn't lower your value. Depreciation lowers your tax liability. Okay, you want the depreciation because, as I said earlier, in any financial institution, the first question should ask you, what is your depreciation interest? Because you add depreciation back in, okay? If you set on a balance sheet, we had a farmer, we had a client who has a trucking company. He had $38,000 profit. He wanted to buy more trucks. Guess what? He couldn't, he didn't qualify. But when we added $171,000 depreciation, he qualified. Do not think depreciation is lowering your value. It's giving you the opportunity to expense out that capital expenditure. So on your balance sheet, if you have $30,000 depreciation, you want that because they're going to add that back in. You want that because you reduce your taxable income with the IRS, and now you're going to get that refund, reduce liability, but that $30,000 is added back into the financial institution. So you actually help your financial position by utilizing depreciation because it's an add back.
Because you can dramatically, especially if you utilize things like the Section 179, which I know you didn't talk about, or even bonus depreciation, which I know is phasing out in a few years, but those things can even expound, how much you can save.
Absolutely, because depreciation is going to reduce your taxable income. But the one thing about depreciation that benefits our agribusiness men and women, because it's giving you accurate inventory. You got to have accurate inventory. When you purchase it, how much you pay it for, when the date you put it in service. Now, don't come tell me now you got a 1957 farm tractor that you want to appreciate. It may not be depreciable value in it when you purchase it. But if you said fair market value, I bought that farm off for $3,000, you may not have to appreciate it. Just carry it as a business expense, a one-time business expense. Okay? Because we get that question all the time. If I got a truck I have in 1967, now I'm putting it in business, how much it may not be depreciable because you bought it in, you put year, make, model in 1967, you probably gonna have that much depreciation in it now. But if you take a one-time purchase from a farm, you can write it off as a legal tax deduction. Okay? But you want depreciation. That's one thing you want is depreciable expenses.
Yeah, and it's a funny thing. It kind of, you have to switch your mode of thinking because on the one hand you want to be as profitable as possible, but on the other hand, the IRS is providing avenues for you to again, lower your tax liability. And in this case, you want to appear on these tax forms, as the lowest profit possible for the purpose of not having so much tax liability. But of course, in your actual business, you want to be thriving and profitable. Anyways, I know we could.
And Ms. Allen, you said something very, I want to respond real quickly. You said the IRS is providing you opportunities to reduce taxable income. You don't have to go get hooked up. There is many opportunities. People coming off so hooked up, we can't get them on the hook. You don't have to get hooked up. You said it the best. They are providing you opportunities to reduce taxable income. Keep the records. The IRS one said that farming is the only exception to the codes. Okay? So please keep good records. And whatever you spend, if you buy a laptop, you buy a thermos bottle, okay? If you're using it for agricultural purpose of your business, that is a tax deductible expense. The jeans, the boots, the glasses you got to see, these are all agricultural expense. Not only the tractor, the equipment, the zero turn, those are all expenditures. So opportunities, please listen to what Ms. Allen said. Opportunities to reduce tax income.
Well, thank you, Darrell. This was awesome. I know we could probably keep going and just nerding out about all this, but we do have a time limit. Unless there's any other final questions that anyone has, I can pass it over to Reba to kind of close this out.
Well, I will say thank you both. This was very informative, and I just want to let our attendees know that if you do want to contact Darrell, I dropped in Rosalind's email address in the chat. So that way you can communicate with them if you just want help for tax season and beyond. And then also I added in our information just to let you all know we are running a special just for our webinar attendees. Allen is our financial services lead, so he can talk a lot more about the program than I can. But we are offering 40% off of your first 2 months. So if you just need your basic bookkeeping going, and if you want to get tax prep, and then we pass it on over to Darrell in the group so they can actually file your taxes, we can do that as well. And of course, if you have any questions, my name is Reba. You can email me at reba@goodagriculture.com. And then, of course, I can just pass you on over to the group as well.
Well, I want to say real quickly, I want to thank Ms. Reba and Mr. Allen. We look forward to a very collaborative working relationship. The work that y'all doing is excellent and great. And we look forward to a collaboration. We look forward to wonderful collaboration, working with you guys. Okay. So we want to thank Good Agriculture for just this opportunity in giving us to talk to you guys tonight. And we look forward with the collaboration we have planned.
Thanks so much, Darrell. And Kelly says, super informative. I'm sure that everyone else shares the same sentiments. But you all have a great night, and then we'll email on over the recording for the webinar along with contact information tomorrow. Have a good night, everyone.